Hello, this is Brandon from Galaxy Stock Market. Welcome to my weekend preview segment, market analysis for June 10th to 14th, 2024. The topic is how to trade CPI and FOMC and profit from this market. All right, let's go. A lot to talk about. Disclaimer, pause it, read it. If you agree, please move forward. Shameless plug on X.com, Galaxy Stock Market. Follow us, tons of great information right there, and members get early priority access. All right, in the news, I always start off with this. What is it telling us, right? All right, so copper is, everyone's been celebrating copper going, gangbusters high, right? Despite the fact that economies everywhere around the world are cratering, inflation issues, talks of war. And then finally, the other day, we broke down into this primary trend line. And remember, copper is great during bull markets, and it's one of the measures to see the activity during the bull markets. But in the environment that we're in right now, copper only went up because all the assets minus the fiat money system outside of the central banking system were going up. Okay, but the problem is that copper is in all of the industrial things, from the house piping all the way into electronics. And we do know that there is a global slowdown, as you know. Okay, so this is a sign, a bearish sign that not all is well. The other thing is, and this kind of makes me laugh, right? Because this is about California. They're doing a lot of great things right now. No pun intended. Yeah, there's pun intended. 10,000 California fast food workers are going to get fired because there's wage controls going on. It never ends well, right, folks? Who's going to pay for $20 Big Macs? Okay, it's not going to happen. And the whole lure of fast food is affordable food. And this is inflation rearing its ugly head. And a lot of that is done by your esteemed leaders at your local, state level and federal politicians, as well as stupidity on our part letting this happen. Okay, but regardless, inflation is here to stay, folks. Okay, then the hedge funds, surprise, surprise, I've been telling you, they're dumping at the top, okay? Retails are becoming exit liquidity at the top. And, the insiders, including Jensen Huang from NVIDIA, Apple, they're all dumping, okay? Jamie Dimon's dumping, okay? And yet the market continues to go high because they want the retail traders to become exit liquidity or bag holders, okay? Don't become a bag holder, okay? Listen to what they're doing, not what they say. Okay, war beat goes on real quick. NATO summit might see most members joining the military Shenzhen. What does that mean? Okay, as the fiat money system or Bretton Woods system is collapsing right now as we speak, hyperinflation, printing worthless money and pretending that the money is there. And a lot of that, most of the wars are brought on by central bankers, okay? And this is the war beat drum, okay? And when they say that we're interested in peace and that we're brokering peace, that's not the case. Look at what they're doing, not what they're saying, okay? And this is all by design, folks. Remember, World War III or the rumors and threats of wars basically is pervasive right now because this is the only way out of this hyperinflation. Guys, zero down mortgages are coming back. It's like we're partying like 2009, 2008, 2007, as if the inflationary pressures aren't enough. Now these geniuses within our banking system and our state and local levels are coming down with zero down mortgages, apparently are making a comeback. Okay, how's this going to end? How did it end back in the financial crisis from 2005 all the way to 2009? Okay, this time we have hyperinflation and good luck with this, but this is telling you the level of desperation that exists right now. Okay, this is the same thing here, but I wanted to say that U.S. troops are going to be sent to the front to fight Russia. Is that what they're thinking? That's the question that this Douglas McGregor is talking about, okay? Why are we getting involved in these foreign affairs, and why are we participating in these proxy wars, okay? While we're on one side, we're talking about we're interested in peace, Russia's bad and we're good, that kind of stuff. But isn't it really about the monetary system, the collapse of the U.S. petrodollars, which I'm going to be talking about right here, right? Saudi Arabia is not renewing the 50-year-old petrodollar agreement. I've been talking about this for the last 2 years, that U.S. has lost its reserve currency status, reserve petrodollar agreement. Okay, this Saudi Arabia not renewing this is akin to declaring war on the United States, because this is what allows us to print money without consequence and export that inflation overseas. But you see that beginning to come back. I think we lost our reserve currency status, and this is the rise of the BRICS, and they're already denominating trades amongst themselves, and they're talking about doing trades with gold-backed currencies amongst each other. Okay, so there's a lot of things happening, and this is why the war beat drum is beating louder and louder, right? And this is the reason why all the assets, including mainly the gold, Bitcoin, and silver, has been going gangbusters, and also, albeit misplaced, copper. Okay, but that is basically no longer the case. Okay, so let's just move forward. Okay, so what's coming next? All right, unemployment. Okay, despite what the employment numbers might have told you, even though the market just freaked out because it means that the rate cuts are coming, 7 million Americans have basically unemployed. That increased from May, and this is what this is all about. Okay, there's a 12-month lag, and it's probably worse. Okay. Then, of course, the insider selling on NVIDIA, 10-for-1 split on Friday, folks. It's not just CEO Jensen Huang selling his stuff. It's everybody. Their second in command, or the second largest NVIDIA shareholder, just dumped, all told, about $60 million worth of shares last week. Okay, they know what's coming. Just follow what they do, not what they say. Okay, I don't give a crap if they're bullish, but they're selling right now at this moment. I think CPI is going to come in hotter than okay? You can't lie about this for a long time. Back in May 29th, I quoted this about the milk inflation, where I compared the about 38.5% rise in milk from 2023, right? And that milk price has not gone down. Despite what people are saying, this is the milk inflation, consumer price index. Think about what that means. Consumer price index. It's going to be hot, so be aware. Okay, if it comes in super hot, the market hasn't priced that in. I think the market thinks that we're going to have a rate cut because the Euros and the Canadians have cut rates, right? Are we going to do the same? If they do cut rates, then that this hyperinflation is by design, and wealth redistribution that's happening. All right, Fed funds rate, we're going to talk about it really quickly, 97.8%. All right, like this even matters. All you have to do is look at the TNX, 10-year Treasury yield. It is skyrocketing, okay? They're going to not cut rates, and they're going to keep it steady, but they're going to just talk about the fact that they're data dependent, the same crap about how they see some improvements. But I just showed you the milk inflation. It's not improving. The job situation isn't getting better. The only reason why the employment numbers are going up is because it's going to the undocumented foreign nationals, and basically, and that's where most of the jobs are coming from, unfortunately. Okay. So keep an eye on this. Doesn't really matter. I don't think Fed's going to be able to cut rates, but I think it's going to be important on what they say, not what they do. Okay. And then what's been confounding me, because, I've been looking for summer rally to start after the June 8th, but our McClellan Summation Index, our directional indicator, is fully bullish, coming down. It's going to probably hit this downtrending line and then start getting into this support level. Okay. It's diverging. So that means that sell-off is imminent. Either this is wrong, or the market, which is heavily manipulated at this point, is wrong. Okay, I'm going to stick with my McClellan Summation Index. Okay, what could go wrong? A lot of things this week. Put to call ratio is super bullish, right? 0.58. There's positive divergences though. We have RSI going higher after forming somewhat of a head and shoulders formation. Can we pull back a little bit more? Sure. But I think you got to watch this right now. This 0.58, I mean, it's just like it's saying the market is bullish, but there is something else that's happening in the markets, and that, with the fear and greed index, something's going to break right here. Okay. And so let's talk about VIX real quick. VIX is telling us that basically, I think there's a little bit more pullback coming. Okay, we did pull back sharply, but we're coming back probably to this level again to make sure, probably on Monday, I don't expect anything fireworks unless some banks in mass starts to fail. Most of the banks are zombie banks. However, I think this is telling us that either we find some support here and then we start bouncing, or we're going to come back down a little bit more, down into the 12.0, 11.89 level, and then we'll start bouncing higher. When it gets there, it might not be a bad idea to look into some VIX calls at that point. Not financial advice. You do your own research. The MACD basically is diverging to the downside. It looks like we're going to have a death cross. That's why I think we're going to come down a little bit more. Let's see if it finds on the CCI some support right down here. Again, we have some, all the indications is that the VIX is going lower just a little bit, but we're near the bottom. Sorry about that. That was, we're going near the bottom. So let's see what's going on with the consumer confidence. Not consumer confidence, but the fear and greed indicator. Here's the funny part about this fear and greed indicator, folks. The fear and greed indicator is telling us that market is actually fearful as the stock market itself. The indexes are hitting all-time highs, okay? So this is kind of new for me because they're usually divergent and they're usually negatively correlated. But it looks like as the market goes higher, the rest of the market is kind of sensing fear at this point, okay? How's that going to go? I'm not sure, but I think it's refreshing to see something like this. Let's go into sector analysis. Based on this, what you need to know is the ones in this orange box, right? The orange box is telling us that XLE, XLU, and XLF, which is the financials, are basically breaking down below, okay? Anything from the primary trend line and it's broken below that primary trend line are bearish and they are beginning to break down. So pay attention to these levels. I know that utilities and energies, but there's not as sexy. But, it is what it is. Now, the ones that are forming possible top is SPY. We're showing some bearish formations. XLY discretionaries bounced a little bit. That includes a Lulu. But remember my consumer demand destruction. This is part of that complex. I think we start coming back in a little bit this week. Okay. XLC communications, putting in that bearish formation right there. Techs. Okay, right below that primary trend line, near the top. Let's see if it pulls back. There's some gaps everywhere. Man, this is one gappy stock. If something triggers and it starts to sell off, it's going to go fast, folks. And then we have the, the XLP. We have the consumer staples, XLV, this healthcare have all looks like they're beginning to put in the topping pattern. Okay, the weakness is also in the materials and in the industrials. We're below the primary trend line but haven't broken down on the primary uptrend. It is definitely below all the moving averages. Okay, so that's what we need to take a look at. Let's go look at our sector report. If we are to break down, here's our sector report. We want to look at the top end ones, okay? And, pay attention to this, okay? These are the stocks that have been at the top end of the range, okay? Right into here. Look at this Scooter report and their numbers, okay? And you can scroll down. There's so much more onto this, but you want to really look at the top end of these spectrum, right? MicroStrategy, NVIDIA. Surprise, surprise. If the market is going to break down, you want to be looking at the ones with the most amount of meat on the bones, okay? Now, if we go in and look at the bottom end, okay, these are the ones we're looking for that are going to have the highest impact when the market turns bullish. We're going to have a summer rally, folks. No matter how much you say it, you don't think it's going to come if the market starts selling off. It's all going to depend on the CPI and the Feds, right? But look at what's here. We have Mongo. We're trading those on our group. 5, right? We got Lulu down here and everything else. These are the ones that are basically going to give you the best amount of opportunity for a short squeeze, okay, when that time comes. So, if you want to learn more about how I use this to kind of look at the different stocks within there and then start doing analysis, this is how we do it in a nutshell. So let's look at this right here. And this is important because in this situation, we have a divergence. And this is an important divergence for you to look at. The top is non-weighted SPX, which is the S&P 500. And then bottom is the standard. Okay, you notice that we've been going up, but this is diverging. We're selling off. I mean, it's been negatively divergent. We've been going down while this has been going up higher. Okay, pay attention to that because there's only a few. In terms of breadth, there's not a lot of stocks that have been holding up this market. So you need to understand this relationship before you get super bullish. We need a cleansing event. There's a lot of unfinished business down below on the SPY and the NASDAQ. Okay, QQQs that needs to be revisited, and I think it may come courtesy of, Jerome Powell and FOMC, as well as the CPI this week. All right. Now, let's look at our transports. Okay. What's happening with Dow Industrials and Dow Transport? This is the Dow theory, right? Here's the industrials moving higher while the transports are coming down. That is a big divergence, and it usually foreshadows a significant market volatility that is about to come, and it's coming, folks. Let's look at the four stalwarts that I think are holding up the markets: NVIDIA, Meta, Apple, and Tesla. Right? Tesla to me is really the early warning system, and Tesla has been weak. Tesla is in this magenta. We've been coming down, and then we have Apple, which has been going higher, which is holding up the market along with NVIDIA. But pay attention here. NVIDIA looks like it's beginning to put in some negativity down to here. If it breaks below here, it's going to sell off. It did a 10-to-1 stock split. I already did a video on these mega stock splits and then what happens to these stocks and the market itself over the next few weeks. All right. It's coming, folks. And then I overlaid it just for fun. We already talked about it. Dow Industrials and the Dow Transports. Okay. If you don't see this divergence forming, okay, one's going higher, one's going lower. And you got to pay attention to this, okay? It's not what it seems. Okay. Now, I told you that I'm not really interested in, this week, I'm not really interested in gold and silver, partly because I think there's going to be a little bit more pullback coming. And, I think we're going to pull back a little bit more. All the indicators are showing that we're ready to pull back. So I'm not going to spend more time on that. It's last few weeks, we've been doing great with gold and silver, but I think it's time to let that pull back and base itself before we revisit this. Silver is the same situation. Okay. Last week I said it's been on a torrid pace, and then so we need a brief pullback, and I think we're getting it. We have a negative divergence on the MACD, and then we're pulling back down. I told you about this head and shoulders formation on the CCI commodity channel index is very important to me, and I think we're going to keep going down a little bit lower. I think if we can pull back down into this 20 SMA and then start rocketing higher, I think that's going to be significant. But we'll see. If there's any fear coming into the market, this is going to bounce. So, but right now, I'm not interested in trading this. I'm going to let it pull back a little bit. 10-year treasury yield is something you need to pay attention to because, man, what a candle that is, okay? It's not a God candle, but it should be. It found support right here. Everything is bouncing off. RSI is going higher. MACD looks like it's ready to form a bullish cross, and the MACD histogram is forming a bullish divergence at this moment, right? And then what we got is CCI breaking up from the bottom end of the channel, going much higher, and stochastics are going higher. And then, of course, we're forming the bullish PPO ADX crush. We got basically the ATR is breaking out, okay, from its primary trend was down. Remember, I told you over and over again, Fed wants to keep this 10-year treasury below, or TNX, okay, 42.5. They got close. I think we got to 42.88, and now it's going higher, much higher, okay? That is negative for the markets, folks, okay? US dollar, okay? It is a race to zero with all the currencies. Who goes to zero first wins, and all the other countries are devaluing their currency against the US dollar. What that means is that we're going to be stuck with all this inflation that's coming, and for a while, dollar has been pulling back. We just broke above this primary trend line right here by that circle, and I think we move higher. MACD is going higher. RSI is going higher. We have CCI that looks like it's putting in a positive bullish divergence, and if it breaks above this downtrend line, we're going higher, folks. All right, I don't care. That's basically what's going to happen with the market. Let's go into the meme stock land, man. I don't really agree with Roaring Kitty, but I also don't agree with naked shorting. Okay, so it's a battle of the will. They're both utilizing FOMO of the retail traders to do that. But basically, I saw the live stream. It was kind of bizarre. I thought he was maybe going to exercise his options, but he didn't. He didn't sell a darn thing. But you know what? What really proved was that he wasn't manipulating the stocks, right? It's the other way around. I think the algos are picking up on his words. It was kind of bizarre, but really, the market went down. He lost something like $200 million in that stream, and he didn't blink an eye. Okay, but I think in reality is that there is that threat of him exercising those 12 million options contracts, which I don't believe Morgan Stanley has it. Okay, and so it's going to chop around, and if we have some volatility this week, yeah, I think this is going to pull back and fill this gap down here down to 22, maybe go all the way back down to 18. That's a possibility. However, it presents an intriguing opportunity for the markets, right? For if you're really looking to take advantage of this. And so, I started this small account challenge, and I chose AMC as a proxy, partly because mainly on the options pricing, and because this thing can rocket higher just based on the amount of short percentage that there is. Okay, I do think it's going to pull back a little bit more. Okay, but I think we're going to start moving higher based on hype, and that's where we are right now. We have positive divergence on the MACD. Okay, MACD is up at the top. I mean, it's been a wild ride. I mean, this thing has been just cratering down, up and down. Okay, but there is opportunities there. Okay, if you're into that. But if you're doing my $73 challenge, you have to look at something with this type of gusto. And if you want to watch that video, I've outlined everything. We have positive PPO ADX divergence. We have stochastics that is positive, and then we also have basically accumulation distribution. It's just sold off like crazy right now, but we're at the bottom end of the range. ATR is still at the top end of the range, which means that I think it's going to chop around at the top level for a while. Lulu. Okay, so let's go over Lulu, because a lot of people after earnings, we basically had a bullish action, but I still think that we're going to pull back a little bit. And if the market pulls back, we can pull all the way back. But over the next few weeks, I think this is going to go higher and then take out these levels. Okay, so this is what we have. And right now on the daily side, yeah, I mean, there's some bullish divergences. Not so clear on the PPO ADX, but that is bullish still, right? But if you look at the weekly, I mean, this is clear cut. I'm just not going to really cut. I'm going to cut to the chase here. Let me see where we go. Okay. Yeah. It's been on a chronic downtrend. It's been selling off. And there's still problems. The earnings itself was fairly bullish. I think it was like better than feared type of thing, like Apple. So, Apple pulled back for a week or so, and then it's going to move higher. I think this is near at the bottom end of the range. We found support right into this buy zone. It did get rejected off of the 50 SMA, but I believe on the weekly, things look super bullish, and here's why. When you look at the MACD histogram, it's positive. CCI is positive. Everything is positive, but this is what I'm super bullish about. It is nearly kissing each other. It is absolutely bullish. Okay, and on pullbacks, this is where you need to, we're going to be accumulating call positions or stock positions. I don't know. You need to find out, right? Banks, I'm super bearish on. I think there is something going on. FDIC came out and said that there's about 62 banks with about a $500 billion in toxic assets, and so basically, JP Morgan on Friday tried to finish off of the top of the day, but it's rejecting off this downtrend line. Everything's on a downtrend. Okay, MACD histogram is negative. Okay, so we basically have those, and so super bearish on banks, and of course PPO ADX is negative. The one that I'm super interested in are the regional banks, right? Regional banks, especially Comerica Regions Bank, as well as Bank of Oklahoma, BOKF. Okay, I really don't like that bank. They have some shenanigans going on. I made a video last week. I know I've been pumping out a lot of videos because we need information, and I'm giving you a lot of information right now at this point. Bearish, right? Everything is coming down. It's just kind of stagnating on the MACD histogram. There is some bullish divergence on the daily on the Comerica, but it's not translating into the shareholder price, right? I mean, share prices. PPO ADX is beginning to form that crush formation, accumulation distribution. They're selling. Okay, we're near the bottom end of the ATR, which means this bank has been propped up. like with all the other banks, and it's basically ready to come down. Okay, let's look at CMA really quickly on the weekly, and the weekly is no different. Actually, it's more bearish. So when you look at this, we broke down from the primary trend line, both up and the down trend line. We're finding support right at this 50 SMA. Intermediate uptrend is broken, folks. This is on the weekly. Weekly continues to go in that same trend line. It doesn't turn. It's like the Titanic almost. And we have a turn in the MACD. MACD is negative. Everything is negative right down to here. Look at our PPO ADX forming this bearish formation, accumulation distribution. Like I said, this has been propped up and now it's forming a negative divergence. And look at this ATR. We're at the bottom end of the range. What did I say about turn in major trend? It's coming, folks. All right. NVIDIA, 10 for 1. Everybody's selling like crazy. Okay. Realistically, on the daily, there may be a top forming. We're getting the divergences. We're getting the MACD histogram divergences. It's coming down, folks. All right. We have the PPO ADX. It's not there yet, but it's developing, right? So we're near the top. Accumulation distribution, it's insane what's going on, but we're near the top on both of them. When you look at the weekly, though, it looks super bullish, right? But everything looks super bullish at the top before everything falls apart. RSI is negatively divergent as we're making highs. Okay, that's a negative divergence. Volume is declining. MACD looks super bullish right now, but the histogram is coming down. So there's a divergence within the MACD situation at this point, right? CCI negatively divergent. Stochastic looks like it's going to roll over. All right, now here's the thing. Is that on the weekly, it's had a small, like a bullish cup formation. The question is this part of this long term, is it going to do one of these shortly? Okay. NVIDIA should be looked at. A lot of meat on the bones. Excessive ranges on the accumulation. I mean, everyone who's bought probably has bought. This is why the insiders are selling. Follow what they're doing. Okay. Don't become a bag holder, folks. Okay. We went over the technicals real quick. I do want to share with you the importance of this week's earnings, not earnings, but economic numbers. Monday, nothing burger. Tuesday, nothing. Okay. So this is probably going to give markets some time to chop around and maybe do some more shenanigans. But Wednesday is really the CPI and the federal funds rate. Okay. Thursday is the PPI. Okay. And then on Friday, we have the consumer sentiment. Okay. This is from Y charts. And I kind of wrote it out here. Who are we kidding? Wednesday is all that matters right now. Okay, folks, this is the big one. Okay, pay attention. All right. Okay. And there are divergences that you see on the macroeconomic indicator. Pay attention to the US dollar. Pay attention to the TNX, right? VIX is near the bottom. I think it's going to pull back a little bit more. Maybe we have some bullish action on Monday, but that is the time for you if you haven't done anything to load up a little bit. But I do expect that summer rally will come. So here's the keys to next week in summary. Market's been bullish. MSI is directional to the downside. It's the first time something like this has happened to me. Okay, so we're going to follow our MSI. As market makes all-time highs, MSI continues to diverge. Fear and greed is in lockstep with where they should be. It's actually diverging with the markets. Usually, as market makes all-time high, it's this thing is super bullish, but it's not. Pay attention to S&P 500 sectors, right? These sectors I already talked about, right? XLE, XLU, and XLF are breaking down. SPY, XLY, XLC, XLK, okay? XLP and XLV may be topping. Watch for a VIX pullback, okay? It's almost done. It's near the bottom, but I think it's going to drop a little more. Maybe heading into the FOMC. Who knows? Okay, we'll see. I'm not interested in gold and silver this week. Let them pull back a little more, okay? Here's the watch list. MicroStrategy, NVIDIA, SMCI, Coin, Dell, DKS, FSLR. They're all near the tops, okay? If you want to look at some of these, go. If you have stock charts, just go look at the scooter reports and then basically look at the top end. You really want the stocks that have a lot of meat on the bones, especially if you think we're going to pull back, okay? Conversely, if you think we're going to have a rip your face off rally, I think that's coming, okay? But not before we get some conniption fit in the market. You want to look at the ones that are beaten down, okay? So MDB, 5, EPAM, nice, Lulu. Lulu's our favorite, okay? I think this is going to be the trade of the summer, okay? Lulu, Okay, but Snow, keep an eye on that. Meme stock, we have small account trading challenge. We got AMC, folks. Okay, let's see where we go. Banking failure watch. CMA, RF, BOKF, Deutsche Bank, JP Morgan, KREs, folks. Load them up. Okay, not financial advice. You do your own research. Okay, synopsis: possible short-term market top with volatility ahead. Okay, TNX and dollar is telling you that. Okay, we're collecting candidates for rip your face off rally once that's over, and we're betting that it's going to be Lulu, GME, AMC, simply because Roaring Kitty's back, and who knows, it's going to be really um, low volume, type of grinding up higher, but it's going to be a wild summer. If you're into trading these, you just got to be careful with them. Okay, not my favorites, but at the same time, we got to do what we got to do to succeed in our small market challenge. Okay, small account challenge. All right. So what do we got next is that follow us on Galaxy Doc Market. Got lots of great commentaries, and anything that I can't get to you. Making these YouTube videos take a lot of time. All right, and so there's a lot of things that happens on X.com, and like us, share us, and above all, comment. Tell me, tell me what you think I should focus on. Tell me if you like the small account challenge. Okay, all right. It's risky. But we're going to apply our Galaxy Stock market metrics and methodology, as well as our phase 4 alpha impulse breakout and breakdown, and our PPO ADX to reach success. If you want to find out about our group, or you want to do some business with me, email me at coachbrandon@protonmail.com. It's right here. Okay, I won't bite. Okay, and also, I know some of our, we have members that are great traders, but some of it is geared towards maybe cost prohibitive for you all. Email me, and we have a kind of the web, introductory membership also, which is still great. You're going to get the market commentary, my commentaries on a daily basis about the market situation, TNX, and all of that, what the market direction might be for the day, and also the weekly watch list, as well as during the earnings season, right? Getting priority access to our X.com posts and these YouTube releases. But regardless, the only way you can find out is by emailing me at coachbrandon@protonmail.com and schedule a consultation. Otherwise, let's go grab some alpha, folks.